All right, good morning, everyone, and welcome to today's webinar. I am Cheska Cordero from Insightful Accountant and your host for today. Now, before we actually start, and while everybody's kind of coming in, I see a lot of people kind of coming in slowly. I want to go ahead and ask our question of the day, just as you guys are settling down. Okay, so Mike, I know a lot of us are way guilty of using the phone a lot. It's an epidemic, basically. So mainly because we have all these different apps now and like we use the phone for everything. Okay, so my question of the day is if you had to delete all but 5 apps on your phone right now, right the second, what apps would you keep?
I'm gonna be honest. If I could take this thing and just throw it in the trash can,
Go back to the to having a pager or just having the phone mainly for texting,
yeah. All right.
texting and
So
calling.
I would have to have is the phone app count as one? You got to use it for phone, right? Phone and messaging. So there's two of the apps right there.
Yeah.
I got email, so I would take that. That's three. Um,
Okay.
what's the next one I would probably keep? I would keep
You have
the banking
two
app,
apps.
right?
Yeah. Okay,
So
one left.
it's four. So one left, huh?
One
Well,
for leisure?
I would do the camera.
Oh. Oh no, that works. Yep.
Yeah. So
You know,
there's my five right there.
yeah. So the basics of a phone. Well, yeah, that's really what it was before, wasn't it? I mean, except the camera for sure.
Yeah, and
What
I
can
don't
you
think
do
I
with?
could do online banking like that. So, yeah, you're probably surprised I didn't say Facebook or the Twitter or any of those type of things. I'm like, that's probably the bane of my existence. I'd rather just pitch those.
Yeah, there was a time like a few years back when I was in college, I deactivated my Facebook just to try to see if I could survive without, and I did, like for over a year and a half, and then it got difficult for me to get in contact with everybody, so I had to bring it back.
Yeah, I like to call my outside, my front yard, my Facebook because I come out and see the neighbors.
Yeah, because that's,
Their face.
basically what Facebook is.
Yeah.
All right. Okay. Well, everybody, again, good afternoon and welcome to today's webinar. Again, I am Cheska Cordero from Insightful Accountant and your host for today. Now, in today's Cashflow Mastery Docs, we'll be talking about working capital management, unlocking cash flow for operating activities with the amazing Mike Milan. Now, I'll have him introduce himself in just a little bit after I cover a few of the housekeeping items. So there is no CPE for this as it is just a 30-minute webinar. And if you have any questions, I want you guys to enter them in the Q&A panel. You guys know the drill and be specific. Don't just say what you mean. You got to ask, "Hey Mike, what do you mean by you want to delete Facebook off your phone?" Mainly because he might not get to your question right after you put it in there. Now we will be sending you a copy of the slide deck and the link to the recording after the webinar. It's also going to be up on our YouTube page within about 24 hours. So if you want to go check it out over there, along with many other webinars that Mike's done in the past as well that might be of interest to you. And I'll also be putting that link to our YouTube channel right into our chat. And also do not forget that we have many webinars for you every month, whether you're interested in practice management, marketing, everything tax, all things QuickBooks, or cash flow management. Insightful Accountant's got something for you, and you can check all our webinars out that are available to you over on our educational webinars page on our site. And do not worry, I'll also be putting that link into our chat as well. And if you have not subscribed to our newsletter, join the tens and thousands of accounting professionals who rely on Insightful Accountant to keep them up to date on news and updates impacting today's accounting professional. And I will be rolling out all those links, so many links, and a copy of the slide deck. Oh, we'll be sending that out throughout the webinar in case you might have missed it. So watch out for those links in the chat. And that was a lot. Mike, that's it for me. Welcome and thanks for being here.
Hey, Jessica, I appreciate that. Live from San Antonio's Cashflow Mike, and we're gonna be talking about cash flow mastery. Now, I've got to tell you, I just rehearsed this in the previous half hour before this session, and I absolutely bombed. I mean, it was terrible. The slide deck wasn't ready. I've had one of those weeks. The slide deck's ready now for you, and I'll have it to you just right after this. I'll send it over to Jessica so you can pull it down so you'll have it because I think it's going to be interesting. It's going to be interesting because we're going to talk about operating activities. It's one of the three sections of a cash flow statement and kind of how to unlock it and how to understand what it's actually doing. So we got some exercises. We're going to do some chat stuff. You can put in some answers. You can respond back and forth. But I want people to kind of understand what this is. It's always an enigma. It's like going, I have no idea what the cash flow statement is or how it's supposed to work or what's going on with it. So I want you to be able to take away from the next 30 minutes the opportunity to go, oh, I get operating activities now. So let me share my screen and get started. And those of you that were joining me on the Wednesday morning meetings, yeah, I apologize. You're going to get a better version now. That I rehearsed, I got it out of my system. So let's make some stuff happen. All right, here's the reason I'm doing this. I chose to, connect with Insightful Accountant because I'm on a mission. My mission is to eliminate cash flow as the reason that businesses fail, right? So I want them to fail for other reasons if they're going to fail at all. Let's not make it just because they ran out of money. Let's make it because, it's a bad product market fix. There's not a good message. Maybe there's a partnership problem, but I want cash flow to not be the reason why we think about this. And it's mainly because of, all the business bankruptcy filings, all the people that think they're making money and they're not. That's what we're here to do, especially on this call, is to be able to identify those folks who are at risk of losing their business and keep them in business. So think about that as your number one job. So what are operating activities? It's basically anything that you do in your company that helps produce and sell your good or your service, right? And it comes from two primary positions. One is the income statement. And from the income statement, it's all the things we do. I don't care if it's depreciation. I don't care if it's, sale of equipment, a gain or loss on sale, your sales, your operating expense, your cost of goods sold. Everything boils down to the net income, which is what we're talking about. And because we're talking about the cash flow statement, you notice that we're going to add back in non-cash expenses. So you start with your net income, then you add back in non-cash expenses, and that's the beginning of building your cash flow statement. Why do we add back in the non-cash expenses? Well, it's easy, right? Nobody's ever wrote a check for depreciation. Nobody's ever, lost, or not lost money. Nobody's ever, taken money out of their pocket to pay for a depreciation expense. That's not the way that works. So that's why we're going to add it back in, because cash doesn't leave or come into the company through that channel. The second part is here. The second part are other things that we do to support our core business. Now, let me say something about operating activities before I talk about the balance sheet. If you've heard me talk about the income statement, I talk about gross profit being the most important number that's on the income statement. It is the only place that you can go to get cash to spend on your expenses or put in your pocket in the form of profit. It's the only place. Well, that means that all things that happen that generate cash have to be accounted for, including your gross profit. In our case on the balance sheet, the most important places to run your business are in the form of your current assets and your current liabilities. These are the only places that you can go to generate cash or use cash, source or use cash to run your day-to-day business. It is called working capital, right? So if you look at it, current assets minus current liabilities, that's working capital. And if you also notice, this is the change. In previous sessions for Insightful Accountant, I've talked about the difference of vertical analysis, which is kind of starting with sales and working my way down to net profit. Well, this is also the combination of the horizontal analysis, right? I'm not just starting with the income statement, starting at the top, working my way down. The balance sheet creates the cash flow statement because it compares two periods, what happened in 2022 to what happened in 2023. It's the change in numbers between those two periods or horizontal analysis that matters, that makes sense, right? So it's the change in assets, and we're going to exclude cash. Why? Because we're calculating cash, right? We're calculating the cash. That's the result. We want to end with the result. So we don't include that in our current assets. So this is the basics of it, right? This is how we determine what operating activities are and how much they account for. So the income statement plus the balance sheet. Now, what I want to do is kind of start off by saying, what is a source and what's a use of cash? Because it makes you think just differently about activities inside your business. So I got a little exercise, and we're talking about a source of cash is like an increase of cash. Cash comes into the business. It's kind of a positive type of number. And then the use of cash is money leaving the business. It's kind of a negative number, right? So the one caveat to this, because there's only two categories, source and use of cash, If nothing happens, if zero cash moves, it's considered a source of cash. It's a positive impact to cash. So just know that if there's a zero, no change, it's just a positive source of cash. So it's zero. Now let's kind of look at it in the chat. Just put an S for source, put a U for use. Is an increase in insurance, if I pay for insurance up front, is that a source or use of cash? So just put it in the chat. Who's got some answers there? Or I'm gonna make you wake up this morning. We got use. Okay, uses. Good. It is. It is a use of cash. You can see this in my icon. It is the dollar leaving the business, right? Leaving the business. How about a decrease in supplies on hand? Same thing. S is source, U is use. I use some supplies I have. KC says source. Kim says source. All right. And they are right. We had supplies on hand. We didn't have to use money to go get more. We already had it here. So it is a source. It's the tricky one, right? Because money might not have left in, but it's a source of cash because we did not use money at all in that transaction. What about if I sold some equipment that I used in the business? Is that a source or use of cash? Got source, right? Source, got it. It is. It's a source, right? I sold something, so money came into the business. What about if I lost money on that, right? If I sold this equipment and I lost money, what is that a source or a use? Anybody got there? Source. Oh, there's somebody says use, right? So source. This is the tricky one. Remember where the operating activities and stuff come from as well. But it is a source because even though I lost money on the transaction, I still sold something and it came into the business, right? I still sold something that came in. So it is a source of cash. What about if I owe more income taxes, right? I had an increase in income tax payable. Source or use? Source or use? S. There's a use. Yeah, so everybody's saying use, but an increase, this is the tricky one, right? An increase in a liability is a source of cash. Now you're like, well, how does that work? I may owe more, but I didn't pay anything. Remember, a non-movement of cash, even though my increase in the balance that I owe went up, I didn't use money. So I kept money in the company longer. And that's what this is all about, is how can I keep money in my company longer or get it into my company faster, right? So an increase in a liability is a source of cash. What about a decrease in accounts payable? A decrease in accounts payable. Who's got it? Got S. That's a source. Somebody, Linda says source. Decrease, use, KC. All right. It is a use, right? Accounts payable went down. So that means I used money to pay some of the bills that I owed that were in accounts payable. So when I use the money, well, I used it. It's a use of cash. What about an increase in accounts receivable? Is that a source or a use? Source or use? Source. There's a use. All right. It is a use of cash. You're like, going, what? How is that? Yeah, I may be owed more money. I did more sales, but that also means I did more work and I expended money to get it, right? So I used money to be able to generate the sale, right? I either used inventory, I used people, whatever it was, but it's considered to be a use of cash, an increase in accounts receivable, an increase in liability, right? Which is the warranty liability. So an increase, we got source, it is a source, right? Because I've already said an increase in a liability, just because I owe more, I didn't pay it, right? It's just sitting there as a payable. How about if I declare and pay dividends? Declare and pay dividends. Source or use? Use. Yeah, that's pretty easy, right? So I gave money out to the shareholders. So I used money. And then last one, I sold some stock, right? I sold some stock. Source or use? Source. Yeah. So source. That's good. So that's kind of what we're thinking about is when you look at these numbers and you see that they're positive or negative, this is kind of the first thing that you're thinking about. Is this a source of cash or use of cash? One of the things where cash flow differs for accountants, we think cash flow is money in versus money out. To a banker, cash flow is it a source of cash or a use of cash? To a business owner, it's like, do I have money today or not? Right? That's kind of the difference. Everybody's using the same word cash flow, but everybody uses it just a little different. All right. So now let's talk about, wait a second, we had yeah, all right. We answered that one live. It was a use. Let's talk about which of these activities are now operating activities. Remember, the three sections on the cash flow statement are operating, investing, and financing. So operating is your core business day to day. Investing activities are investing in for future growth of the business, right? You're buying stuff like trucks or equipment or land. And then financing is more about the ownership. Like if I took on a loan to fund the company, well, that's debt financing. If I took on shareholders, that's equity financing. So if you think about it that way, operating activities are found mostly on the income statement and a little bit in the, and not a little bit, a lot in working capital, the current assets, current liabilities. Investing activities, usually you find them in gross fixed assets on the balance sheet, and you find them in long-term debt, right? Because I use long-term loans to buy the fixed assets. And then financing activities are generally in the equity section, or it could be in long-term debt as well if I used a bank loan to fund the company. So kind of think about it that way. That makes it a little bit easier for me. But if I think depreciation expense, is that an operating activity? This is just a yes or no. You can put a Y or an N. Is depreciation an operating activity? Yes or no? Yes. Yui says yes, yes. Okay. And Linda says no. And the answer is yes. You're like, oh, wait, what do you mean? It is because it's included in the net income. You remember this whole thing starts with net income, right? The whole thing starts with net income. So the depreciation expense is included there, but then it later gets back out. So what about the proceeds from the sale of the equipment? Proceeds or not back out. It gets added back in because it's not cash. But proceeds from the sale of equipment, is that a operating or not? Yes or no? Linda says no, no. Yep, nope. That's cash flow from investing activities, CFFI. That's what that means, cash flow from investing. So that's cash flow from investing. What about if I lost money on that? Is that an operating activity? No, no. Anybody got a different answer? No. I lost money on the sale of equipment. The answer is yes, it is, because even though it's an investing activity, the sale of the equipment, the loss is recorded on the income statement as a loss on sale or a gain on sale, right? What about the declaration and payment of dividends? Is that an operating activity? Declared and paid dividends. No, it's actual cash flow from financing, right? That's a financing activity. It's money given out to the owners. So it's a financing activity. What about I made money on that sale? This one I lost money, number 3, but now I made money. Yeah, 2 and 3 are confusing since the proceeds are on the P&L. Negative, right? When you sell a piece of equipment, it gets recorded on the balance sheet against the actual asset. The gain or the loss gets reported on the income statement, which makes the gain or a loss the actual operating activity, but the sale is actually an investing activity. Hope that makes more sense. That's why I put it in here, because it's really confusing that way, but it's a split transaction in that case. Okay, so the gain is the sale of it, and I'll do it again. The proceeds from the sale of an automobile is not. The sale is actually an investing activity, but the gain on the sale is an operating activity, or the loss on the sale is an operating activity. How about if I increased inventory? I bought more inventory. Is that a operating activity? It is, right? Increased inventory. Inventory is a current asset. That's an operating activity. An increase in accounts payable. Is that an operating activity? Yeah, it is, right? Again, increase in a current liability is an operating activity. How about if I paid down a long-term bond? Is that yes or no? Yep, nope. It's cash flow from investing in this case. And if I bought back my own stock, it would also be a financing activity. So good. Yeah, the purpose of this is to help you see what the actual actions are that contribute to the numbers that show up on the cash flow statement. So let's talk about that for a second, right? I mean, how to optimize these things, or how to optimize it first. And then secondly, I'm going to show you how it gets built. But when we look at optimizing operating activities, these are the things that you always read about. If I Googled this one time, and there were 641 million results about how to optimize operating activities. And after 10 pages, they all said the same thing. They said that they pretty much, hey, take better care of your inventory, which is in my course, I give people an inventory master worksheet where they can calculate a par per SKU, which tells you exactly how much you should have without running out, without having too much, without having too little. You have exactly the right amount all the time. You've got accounts receivable, which is, we all know that there's a process. Some of the clients I've had in the past, they don't have a great process. Sometimes they forget to even send out an invoice. If you have a great process, chances are you're going to increase cash flow. Don't give out credit to people that are probably bad credit risk. And sometimes offering an early payment discount works in improving your collections as well. Operating expenses, I've showed this in the past here. What's necessary. I've got a chart that says, hey, do I need it? And can I afford it? Right. So there's only one answer. I need it and I can afford it. That's yes. Everything else you can cut. And that's what we're doing. We're looking for unnecessary expenses. And then negotiating your payment terms. I used to do this with the suppliers at the restaurant all the time. I went from initially COD to having at least 14-day terms. And I going, that's all you got was 14-day terms? When a restaurant, it's so fast, right? Because they know it's a perishable good. There's spoilage. There's all kinds of stuff that can happen. So 14 days is actually pretty good. Some beer vendors allow me to pay in 30 days, but negotiating better terms is going to help keep cash in the company a little bit longer. Then we got revenue streams. This is where, you've got to look at other ways to bring in cash to the company, right? What are the other ways you can bring in cash to the company? I use the example of, how did landscapers do it, right? They started adding Christmas lights and things like that they could do in the wintertime. So there's other ways to diversify your revenue streams and always focus on pricing, right? So I'm going to put in my Facebook group today, I'm going to make a short little video about this upscaled pricing spreadsheet that I have, and I'm going to give that out for free. So if you go to Clear Path to Cash to my Facebook group, you'll be able to get my pricing strategy or my pricing spreadsheet today to be able to put bids together for labor and material. It's going to be really cool. It's going to be about a 5-minute video that goes with it. And then lastly, cash flow forecasting. I tell people all the time, I said, hey, why do you look both ways when you cross the road? Well, so you don't get hit, right? When you cross the road. Well, it's the same thing in your business. You got to be able to look down the path, look out into the future and go, oh, there's a bus coming. I shouldn't go out into the road. Real-time data, making real-time decisions is the best way to understand your cash flow. And you can do that with a bunch of cash flow apps. You can do it with, a spreadsheet if you want to. But everybody on this call probably knows I was part of the cash flow tool team. I'm friends with a guy named Blaine Birch who runs Dry Run. So there's plenty of places to get cash flow forecasting apps to use. So let me talk about this cash flow statement, how this works. This is a balance sheet where I've got last year and this year, right? We'll say last year and this year, or 22 and 23. And remember, cash flow statement is horizontal analysis. It looks at the change in periods. So because this is a cash flow statement, we're going to ignore cash, but I want to kind of show you a neat trick with the balance sheet. One is, we'll say the accounts receivable balance in 22 was 345 and 23 was 250. It went down, but the number is positive. Why? Because people paid their invoices, right? They paid their invoices. So I got money. It's a source of cash. So it goes up $95 or 95,000 in this case. Then we got the next one. This is 00000, positive impact. Doesn't have a real impact in your calculation, but property, plant, and equipment went up. We bought some stuff, so it's negative because we bought stuff, right? So cash went down. Now, here's a cool trick that you can do. Ignoring cash, because we're calculating cash, add these together. You got 95 minus 260 equals 165. That's the top half of the balance sheet, the asset side. Now let's go to the bottom side of the balance sheet, the liabilities and equity. Do the same thing, right? Accounts payable went up, but it's positive because I didn't pay any money. I might owe it, but it's a positive impact to cash because I kept that much in the company longer. But then I paid down some debt. I paid down some taxes. I'd made all these payments. And at the end, this is how much money I made. This was my net income. Retained earnings is the result of net income. So when I add these together, the 26 minus 2 minus 10 minus 89 minus 14 minus 1 plus 378, ooh, I could be an auctioneer. You get 288. You're like, okay, Mike, what do? I got 165 negative to the top, 288 on the bottom. Well, let's add them together. I got 165 up top, 288 on the bottom. When I add those together, I get 123. Well, guess what? Here's the cool part. The change in cash goes from 12 to 135. Ironically, 123. Most people don't know that the change in the accounts below cash will equal cash. So what I do with all this information? Well, that's how they divide these things out into the cash flow statement. They just say is it an operating activity or not. So what we're going to do is we're going to take these numbers, these changes, and on a cash flow statement, just put them there. Like that 378 gets put for net income. All the top ones, operating, cash flow from operations, right here. All we're doing is sorting them differently, sorting it. So then I got 95, and I've got 26. Everything that is an operating activity gets put in the operating activity section and creates the cash flow from my operations. But that's how the cash flow statement is made. It is the change in numbers that gets sorted into operating activities or investing activities or financing activities. And look here down at the bottom, the change in cash, comprehensive cash flow is what? 123. Doesn't matter how we slice and dice these numbers, you're always going to come up with the change in cash is the same change on your balance sheet if we're doing it right. So that's a way to check yourself. Anyway, I appreciate you. I made it in under 30 minutes again. I'm getting better at this. But if you haven't already, go to my website, cashflowmike.com, get a free copy of the 7-minute conversation. You can join the Facebook group. Remember, today I'm going to put out the it's newer, the newer pricing guide, how to create prices and bids and calculate gross profit. And actually, it's got some other cool features I think you'll like too. It's a cool spreadsheet there. I do have a podcast where I talk about stuff like this all the time. It's called Mike and Blaine. Just go to mikeandblaine.com or anywhere you get podcasts. And then lastly, if you want to know what I do, like the Clear Path to Cash or my certification program called Pathfinder, just let me know, Mike at cashflowmike.com, and I'd love to connect with you. So appreciate your time. Cheska, look at that. Boom. Nailed it. Landed it.
On the dot with a minute to spare. All right. Well, thanks so much, Mike, and everyone for taking time out of your day to hang out with us. All right. Well, before we actually close this webinar, remember that we have many webinars for you every month, and you can check those out on our educational webinars page. And do not forget to check out and subscribe to our YouTube page and newsletter so you don't miss out on news and updates that impact today's accounting professional. All right. Well, thanks, everybody. Have a good day, and we'll see you next month for next month's session. All right.
Thanks, man.
Bye.